We all know Shell as this oil and gas company, but actually they are changing. They are going more and more into renewable energy. Just recently they bought a company called Spring Energy, which is a company based in India that develops and manages renewable energy facilities such as solar and wind farms. And Shell also announced a deal with US Steel, and they will try to find clean solutions for decarbonization, such as carbon capture, utilization and storage. So they are mainly an oil and gas company, but they are thinking about the future. They are investing in a business that they will become in few decades. And the recent results were quite exceptional. We can see a growth of 154% in income and 26% in cash flow from operations. And the net debt went down by almost 20 billion. So we have a company that is thinking about the future and that has recent results quite astonishing. But we always have to remember that results for a quarter or half a year, they shouldn't impact our decisions as value investors that much. We have to think about the long run. We have to think in years or even in decades. So let's see, is Shell a good opportunity for an investment in a long run? Okay, so what about investors? Insider buys, that's an X. There is no movement with insiders. And super investors, that is also an X. Of course, there are some big investors that own Shell, but it's never a really major investment for them, and in the recent quarter more of them are selling than buying. Okay, so let's see the fundamentals of this company. Return on invested capital, that's an X. It's a 6.1% gain on average in the last 10 years. But what we are looking for is a result over 10%. So we are not quite there. What about free cash flow growth? Same thing, it's an X, 8.7%. And also here we are looking for a 10% growth. But we should always remember that different markets have different rules. And this is an oil company. It's a big, stable market that is not really growing. So these results for an oil company are not that bad. And what about shares buyback? So that's an X. In the last 10 years, they issued 24.5% new shares. So they are diluting their investors, their shareholders. But we should also notice that in the first half of this year, they bought back shares for $8.5 billion. And straight after that, they announced that till the next quarter, they are going to buy back shares for around $6 billion. So in the long term, they are issuing more shares, but maybe it is a beginning of a new chapter and actually buying back shares by Shell. Okay, what about dividend yield? That's a check. They are paying a very nice dividend of 3.7% yield, and it's a stable dividend, so they have cash to pay it every time it's due. Now, years to pay debt. It's a check. It would take them 2 years to pay back their debt. But actually, I didn't use the current free cash flow because the recent year was really exceptional. They had great results thanks to a very high oil price. And for that reason, I used a 5-year average free cash flow to calculate the years it would take them to pay their debt back. So they could probably do it even faster than that, but it's a good sign. And in the last year, they actually paid almost 20 billion of their debt back. So they are not only buying back shares in the last year, but they are also paying the debt back. So it's a good sign for this company. So let's find the intrinsic value of SHEL. So we will have to estimate the growth rate for the first 5 years and then another 5 years. And we will make 3 scenarios: a low one, a medium, and a high one. In the low one, we can estimate a growth of 1%, then another 1%. In the medium, 1% for the first 5 years, and then 2% for years from 6 till 10. And in the high scenario, let's say 2% for the first 5 years, and then 3% from year 6 till year 10. And you may say that these estimates are really conservative. But first of all, this is a business that is not growing that much. It's a massive company, and it's a market that most probably will be shrinking in a long term. And second of all, we always want to be conservative, because if the numbers are too low and we buy with those and the company actually grows faster, we have a bigger chance of making this investment very profitable for us. Okay, so let's see the intrinsic value. It's somewhere between $74 and $83, but that is without the margin of safety. And we should always use a margin of safety. I use the 30% one. So the price that we should be looking for is $52 per share to $58, $59 per share. And the current price is $54. So we are really close to the point in which we could consider buying this company. It seems like SHEL can be an interesting opportunity, but do your own due diligence, check this company, read their results, find out where exactly they are going, what are their plans, what are the risks concerning the future of SHEL. And remember, this is an oil company, and they are always really dependent on the price of oil. But at the same time, they are thinking about the future. They are investing in renewable energy. So let me know in the comments, what do you think? Is it a buy, or is it a company that slowly will begin to disappear because of the changes in the current world? So that's it for today. Thank you very much. I hope you enjoyed this video and you found it helpful in some way. And if so, then please like it and subscribe to the channel if you haven't already. Thank you again, and bye-bye.